Raising funding for your startup is a challenge. How much should you raise? Where do you find investors? And how do you pitch them? In this segment, How to Raise Funding for Your Startup, we'll answer those questions and more. Here are live outtakes with startup founders on how to raise funding. I hope you enjoy this episode. Welcome to another insightful episode of the Investor Connect podcast. I'm your host, Hall T. Martin. In today's conversation, I had the privilege of discussing various facets of the startup ecosystem with another guest. In this conversation, our guest shares his experience from a crowdfunding campaign, shedding light on the complexities of gaining user traction and the innovative use of AI and speech recognition technology in education. We talk about the strategic transition from crowdfunding to private placement, encompassing concepts such as safe notes, convertible notes, and considerations for attracting larger investments. This episode offers a wealth of insights into the intricacies of startup funding and business development. Let's dive in.
Hey, Hal.
Hey, Scott. Thanks for joining.
How you doing?
Good, doing good. Looking forward to catching up. How are things going for you guys?
It's good. I'm just out in Phoenix, actually. So I just got here a little bit ago. I was at a conference for a couple of days, and I figured I'd sit outside and then sit by the cactus here.
Oh, cool.
So yeah, where are you based out of?
We're in Austin, Texas.
Yeah. I hope hopefully we'll be there, and I think it's March for the South by Southwest conference. I applied as to do a pitch debate there for our organization and their EdTech conference.
Okay, great.
Yeah.
Good deal.
So tell me about yourself. I saw your stuff, saw your website. I appreciate you reaching out. I don't even know how you found me, but love to hear a little bit more about yourself.
Sure. My background is I started 3 angel networks in Texas back in 2006, 7, and 8. CTAN was the first, Baylor was the second, Wilco was the third. Had a lot of fun doing angel work, so I retired from my day job at National Instruments, now called NI, and started working on angel groups and forming capital. We called ourselves originally Texas Entrepreneurs Network, and we'll focus on Texas. It just kept increasing our investor pool. Went from 2010 to 15, I was going to the Bay Area one week, New York the other week to find VCs for my angel-led deals. Then we had a whole bunch of family offices come in 2016. They wanted to do the deals direct. 2017, I was getting calls from outside of Texas wanting access to our investor network. Time was 5,000. Today is 20. And we went national with our program and changed our name from Texas Entrepreneurs Network to 10 Capital. That's what 10 stands for. And started doing our program around the country. And at heart, it's investor relations. We help investors, get connected with startups and help tell the story and help follow up to close. And then for angel groups, we help them find members, and for VC funds, we help them find limited partners. We only charge the startups, the VC funds, and so forth. They do barter arrangements for us. They give us feedback and they coach our deals and all those good things. So that's how we work. We have worked with a fair number of WeFunder campaigns and crowdfunding. Our angels, are very familiar with that. And for those deals, they punch money in on the portal instead of giving it to the startup founder. And so they always ask me, which way am I doing it on this one? Do I give it to the portal or do I give it to the founder? And so we have angels that come in on these campaigns. The VCs, not so much. Family offices, not so much, but the angels certainly do. I always ask about, do you have a credit investor raise coming afterwards? Because if you do that, then it's better to use this then, because you'll get 50K checks. If you do the WeFunder thing, which you can do, you get more like 5K checks. And so I hate to leave 45K on the table, but if you're only doing this, that's one way to do it. So we come into a number of these campaigns and run a 3-month program, mail it out to our network, explain what it is, get people interested, and see if we can drive it in. We do need to figure out how to track our results. Some people just put us into the big bucket, and at the end they wonder what came from you, what came from me. And so you do have to kind of figure out maybe a separate link or whatever. How do we track where people come from? Because we've had people get money from our deals, but not quite know how much or when or where. Our fee is a monthly retainer, $3K a month for a 3-month commitment. After that, it goes month to month. So that's how we work and what we do. Some people, been in the program, 5, 6, 7 months. Other people program just 3 months and they get to where they need to go. So that's how we work and what we do.
Yeah, that's pretty cool. I mean, I wish I would have connected with you. I mean, there's been so many people that I've connected with after I've kind of gone live, and just if I would have done this all over, I would have totally done it different. I think that's just very typical. But we started out with a crowd fundraise, and it just fell flat on its face. I ended up not doing like a big portal. I ended up kind of doing my own thing on my own island because I was told that this is the best way you can control your leads. You can kind of control the lead flow, and the marketing agency that told me that this is a great way to go. And I kind of had all these other people lined up. They ended up walking away from me. They closed their building, they closed their shop after taking a bunch of money from me. So I ended up my crowd fundraise did not go so great. So
No, I'm good. I get you.
Yeah. So I still have it out there. Only because I've spent so much money on it. I figured I might as well just leave it out there right now. But what I've been doing in the meantime is really just I have just been pumping it out to so many different people on different investor networks and stuff like that, and just driving kind of I spent a lot of money on my own time building out the rest of the platform. So it is self-funded bootstrap. I've got probably over 350,000 into it at this point. So we launched on November 1st, and super cool product. I worked with CMU, Carnegie Mellon University, and we basically have integrated AI and speech recognition to build a platform that really has make an impact on a lot of kids, both in the U.S. and abroad. In fact, I got a call with another guy after this. He's got access to 15 million international online students that are going through bilingual English language. So he was really interested in what we were doing, especially in the generative AI space. So we're talking to him. So I think if I can figure out how to put a deal together with some users, because that's what most of these guys have been saying to me in the last couple of weeks is, oh yeah, well it's great you got a product, but where's your users? It's either you're too early or you're not far enough along. And that's kind of why I mentioned you the other day on my email. Like, I got 20 guys we're talking to, and I feel like, something's going to pop, but I just don't trust anybody to come through, and because I got burned. So just trying to figure out what the best option. So we have you ever heard of Core Connects?
No.
Yeah. So Core Connects basically is our electronic back office for all of our investor portal. So they basically handle it's the platform that connects into the payment rails, that handles the investment. They manage the cap table. They manage my 10Ks, all that stuff. It's spelled with a K, Kore, Connects, Conx, I think it is.
Okay. All right. That sounds cool.
Yeah. So basically, which is cool because we basically have a platform that, we can bring in any investor at any time. I assume most of your investor network is all accredited. Is that correct?
Ours are all accredited. Yeah. They can invest as much as they want to in the deal.
Yeah. Yeah. And so most of your deals, would you say, are ranging what, 50 to 50,000 plus? Is that kind of what you said?
You mean number of investors or dollar invested?
Dollars invested.
So the angels write, 25, 50K checks, and the high net worths write 100, and the family offices write 250, and the VCs write 150 to 500, depending upon the size of the fund. Crowdfunding campaigns, I find they often come in a lot lower. 5, 10K is what you often see them come in, which is for some deals is a good deal. They'll do it for 5 or 10, but they wouldn't do it for 25. So in one sense, you do get more checks out of it that way. So those are the average numbers we see.
Yeah, I mean, I was thinking of just dumping my Reg CF and just moving to a Reg D. What are your thoughts on that?
Well, if you're not getting traction with the Reg CF, I recommend it. I get a lot of people coming to me saying I was spending all day trying to convince people to put in $500 when I should have been spending my time convincing them to put in 50K because it was the same amount of work. So up front, we always recommend do the angel thing first, get a market rate valuation on it. We do get people thinking that they're just worth $50 million because they're cool and they're on Reg CF, but that's not really the case. When you go to angels, they aren't putting your money Most crowdfunders aren't looking at that, but all angels look at that very hard. So you want to get a market rate valuation, and you really want to work these guys for 50K checks, not mass market for $500 credit card clicks or whatever we're doing. So that's why we recommend it to do the angel thing first. So if you're not getting much traction on the Reg CF, I would go ahead and step out and do the Reg D thing, and then go back to Reg CF on the back end, because I've had people raise good money on the Reg D, and then on the back end they go raise another 500K. Typically, if you're doing Reg CF, you need a network of 10,000 to go to. If you have that in your network, that's great. If you don't, that can be very expensive to pay for in social media and email marketing spend. So you got to think hard. Do I really have the network to do a Reg CF? And the platforms will do something for you, but on average, platforms like WeFund and others, it's more like 1% to 2% of the fundraise will come from them. The other 98% is coming from you. So you know where the load is going to sit. It's going to be on your shoulders. That's why in Reg D, you can go work 20 guys a lot easier. You can work 10,000. So anyway.
What are your thoughts on doing a safe versus having to get a valuation? It kind of takes the valuation.
Most people start with a convertible note or a safe note. With safe notes, you want a post-money safe note, because investors have tuned into the fact that pre-money safe note can vary their investment ownership based on how much you raise, which can change from what you start with. Post-money safe note is fixed. They know what they're going to get, and the valuation cap is better for them. And safe and convertible note, I can go either way with those. I like convertible notes myself as well, but still, it's up to you.
Yeah, I mean, I was thinking of kind of going in that direction as I kind of shift gears here, and just whether it be my one investor, he's like a 250 guy. He said that he'd want to have some sort of cap, because he said he just got burned on a pretty big deal that ended up going to market at like 100 million versus where they thought I was going to go to market. So I don't know how I feel about that. I don't know if that's hurts me or helps me, but I think getting the right capital structure in place up front is important. So you have a network, and you typically, do you just email out to your group? Is that what you do?
Yeah, we use email to reach out to them. And if you join today, I'll see how to sign up. But if you join today, we would have an onboarding call tomorrow, basically putting an intro mailer together that we're going to put out to the network in about a week to generate interest. One I just did yesterday had 900 people express interest in it, albeit cursory. And then we do updates to them. We invite them to hear you pitch on our events, and we just start working that group through the process. It does help to have some growth story going on. There's something happening in the deal that gets people excited about it. So if we're sitting there with nothing happening, it can be hard to do for sure.
Yeah, I think the challenge is that I spent all my money on development, and I built a really cool platform. So it has a great story to it, and I just need to get users. So that's why I'm talking to this guy. And if I get some traction, generate a couple thousand users, 3,000 or 4,000 users, that's a pretty good story right there.
Yeah.
Just to kind of get it going. So why don't we do this? I got a lot of calls this week and next week. Let me see how those go. If, and timing might not be good with the holidays. Do you usually, is there anything that happens at the end of the year, tax reasons for these guys? Are they looking for any benefit, or is there anything that I'm not thinking of that I should know about?
Not really. In our program, if the last 2 weeks of December are pretty well, everybody's off. So if your campaign goes over the last 2 weeks, we'll just give you 2 weeks on the back end of the campaign, so you don't lose that time. Some people use December as a time to get the mailer together, get it out, build the list, and then go after them hard in January. That's fair game to do. So you can always do that, or you wait till January to kick it off. So either way works, but you don't lose anything if you go over the holiday.
Yeah, so you're going to collect $3,000 a month for 3 months, and then you're also going to get paid something by the investor. Is that correct?
Well, no, the investors don't pay us. They're doing the diligence and they're putting in the dollars, so they don't typically pay for deal flow. Some have search funds; they pay for very specific things, but that's not every case. There's no broker fee or anything like that on our deal. It's just a retainer. I looked at the broker model, but found I was going to lose my angel groups and VC funds because they don't allow brokers in the deal for the most part. And we want to use those guys a lot. So, and we make good use of angel networks and syndicate funds through our program as well.
Okay. So your fee is just $9,000 basically.
Yeah. Just the retainer is all it is.
Pretty straightforward. And then you just help get the deal out there and kind of facilitate
run the campaign,
setting up these meetings.
Meet investors, close investors. We have a process, funding funnel, and so forth that we use to work people through, trying to get to them to join, and then getting out and showcasing that they're looking for momentum and traction in the deal. So how do we showcase that? So we had to find ways to show that things are moving forward.
Yeah. What is your what would you say your average raise is?
Well, in the life science space, it's $3 to $5 million for a seed. For tech, it's really more like $750 to $1.5 million. The first raise is really the minimum raise. It's not the maximum because your valuation is low. As you get more sales team and product and traction, you can raise the valuation. And if you're raising a large amount like $2 million, we'd break it down into 2 or 3 steps. The first 500, next 1 million, next 750, something like that. So, and you raise the valuation from one step to the next is what you do.
And I know you probably can't even answer this question, but what's a realistic valuation in terms of like that first step and the second step, just to kind of drive that interest?
So you want to make the first one really, really interesting for investors because that's the hard one, trying to get people to come in first. So you make that like $3 million. Next one goes to 5, and next one goes to 7, or you step it up by 50%. Is what you do. And the idea is it creates, if you want that really nice price money at $3 million, you have to come in early, and that's if you structure it that way, that can incentivize people to come in early. And once you get the first round closed, you have a win, and that helps provide momentum for the second and third round. When you get 70% of the way through the round, you declare in 6 weeks for closing who wants to be in, and then start driving people through it, talking about all the interest and committed funds that you have coming in to give people a sense of urgency that goes with it.
Cool. I got it. All right. Well, let me do this. Like I said, let me get through the next, let me see how the calls go the next couple of weeks. And that includes, user growth, which I think will feed into the story. And, I'll reach out to you if I'm not feeling like we're going to get the traction, because I need to get some traction here. And I also am waiting for a big grant to come in from a local foundation.
Okay.
So that's like, non-dilutive capital, $1.2 million. So if that one hits, that would be great. I mean, is that a good story? That's
a great growth story there. It shows validation. People believe in your product, technology, and space. So that'd be a helpful thing.
Cool. So let's do that. And if as I get some good information coming in, I'll make sure I keep you in the loop. Okay.
Sure. I'll send you an email about how we work, and I'll send you a campaign proposal. You can look at that with your team and decide when the right time is, and go from there.
That's awesome. I really appreciate your time.
All right. Thanks so much. Have a good one.
Thanks again. All right. Yep. I'll see you. Bye.
And with that, we conclude another insightful episode of the Investor Connect podcast. A sincere thank you to our guests for sharing their valuable insights into the intricacies of the startup landscape, from delving into the challenges of crowdfunding to the transformative potential of AI in education. Our discussion covered a broad spectrum of vital topics. Your feedback is pivotal in shaping the trajectory of our future episodes, so please feel free to share your thoughts, questions, or suggestions. I appreciate your time and attention. This is Hall T. Martin. Until next time, stay informed and happy investing. Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Hall T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.